Welcome back to the FX Blueprint. In today's video, we're going to answer very important questions. What are support levels and resistance levels? We're going to define this technical analysis concept and understand how it works, why it matters, and how you can use it to become a better trader. Now, a support and resistance can be horizontal, and oftentimes they can be diagonal. So the first important question would be, what is a support level? Now, a support level is an area where market tends to stop falling and it bounces back up. It is a zone where buyers have previously shown enough interest to slow down or prevent price from dropping further. As shown in the diagram from your screen, the market is moving downward and it stopped 3 times at the same level, indicating a very strong strong support level. Now, on the other hand, a resistance is a price area where the market tends to pause its rise and react lower. It's basically a zone where selling pressure has previously been very strong enough to slow down or stop the upward movement. As indicated in the diagram, you can clearly see it stopped 4 times, signaling that it's a very strong resistance level. Now, in simple terms, I would say the support acts like a floor under price, while the resistance acts like a ceiling under price. Of course, you may ask yourself, why do these levels really matter? It's important to understand that the market often remembers areas where strong reactions happened before. These zones help traders identify where price may pause, reverse, or even break out with momentum. So instead of seeing the chart as random movement, support and resistance give structure to what we call price action. They help us identify where buyers and sellers may become active. Now, just because a price touches the level doesn't necessarily mean you should rush in immediately. A better approach is to wait for confirmation, be it in the form of a candlestick behavior, market structure, momentum, or even just a simple clean retest of the zone. Remember, the goal is not to mark a line on the market. The goal is to understand how price behaves when it reaches that particular level. Let's go ahead and look at a live chat and see what we're talking about when we're looking at support and what resistance levels. As previously mentioned, it's always important to couple this with Japanese candlesticks, which are extra confirmation for why you want to trade at that region. Right now, you're looking at a live server from LMFX, and this is the day chart of the US index. If you look at the candle structure within this region, as it was reaching towards what the price level of 100, which was previously hit by this position and that position over here. I'm going to go ahead and zoom it in 4 hours, and we're going to be able to draw a trend line while we observe the candlestick structure. Obviously, the price was being ushered up in this manner, and then I would grab another trend line over here, which would signal to me that this is some kind of ending diagonal. Okay, yes, I have the confirmation that it's reaching towards a resistance, hence why I'm anticipating, or you guys are anticipating, that it's gonna the price will reverse. And so if you go in 4 hours, you can clearly see that is the case. And so the market goes up, keep going up. The highs are getting slightly higher, but they seem like they're keeping the same price level, while the lows over here were slightly being squeezed, and then eventually the market gave us a good gap. Market gave us a good gap, turning the start of that gap into a resistant level when it came bouncing on it. You can clearly see this demonstrated in 1 hour. And so if you were trading this pair or trading the index, you would have used the support, the bigger support, and the bigger resistance level, and you would have tried to zoom it in and use your candlestick structure to try and make sure you have exactly what you're looking for.